Okay, good afternoon and welcome back everyone to our Thursday afternoon options education webinar series. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay. And today we're here to talk about a topic that is very near and dear to my heart, which is technical analysis. And more importantly, how you can leverage the different tools that we have built here at OptionsPlay to leverage technical analysis the same way that I do. Because technical analysis can be confusing for some of you that have explored it. There are literally infinite ways of utilizing these charts to gain a directional view. And for some investors, you might actually find it more confusing than helpful when there are so many different options. So today, what I want to do is spend a little time and talk a little bit about how you can utilize the tools that are available to you here at OptionsPlay to leverage technical analysis and, more importantly, gain that directional edge. And the key here is the speed at which you're able to do that analysis and gain that directional view. So that's what I really want to focus here on, or what are the different metrics that you want to focus on and how you can do it very quickly using the OptionsPlay platform. So let's go ahead and get started. Before we do, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So today what we're going to do is we're going to talk about the directional edge using OptionsPlay. We have quite a bit of education here for you during the month of November. Last week, we talked about the US election debrief and the different outcomes and what we expect. We've talked a lot about that on Tuesday as well, as far as the market's reaction to the vaccine news and how we wanted to fade some of that. And largely, we've seen that so far. So the question is really, how do we decide, or how do we look at investments and opportunities in the market and quickly gain that directional view, whether we're bullish or bearish on a stock or ETF. So that's what we're going to explore here today. Next week, we're going to do a deep dive into the different tools and services that are available to you here as OptionsPlay members. Many of you have been utilizing us for various use cases, whether you are looking for ideas, whether you're looking for cover calls, credit spreads, and analytics. So you want to make sure everyone understands the full spectrum of what you have available to you so that you're able to maximize your free trial or your subscription. And then because the last Thursday of this month is Thanksgiving, we'll be skipping that. And just wanted to wish everyone a happy Thanksgiving for that week. But that's the schedule coming up here for the rest of November. But for today, what we want to focus on is really how can you leverage technical analysis to quickly gain a directional view on any stock or ETF. And the key word here is quickly, because you can sit there and look at charts and spend a lot of time researching, fundamentals, different charts to gain a directional view. But the question is, we all lack time. We all have a limited amount of time. And many times markets open, they react very quickly, and you need to be able to make a decision fairly quickly. How can you do that very quickly? That's what we want to show you here today. So my name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay. I have been leveraging technical analysis in my work for the past 15 years, and I've worked with thousands of retail and institutional customers, helping them better understand the markets, understand the, whether you're talking about currency markets, futures markets, commodity markets, leveraging technical analysis to be able to do so. So what I want to share with you is what I've learned over the past 15 years and why I keep my charts extremely simple to help me gain that directional view. So that's what we're going to discuss here today. And it all comes down to what we consider as information or data overload. If anyone can relate to this, please type 1 into the chat window. If you simply feel that sometimes there are too many data sources out there, and even within one data source or one type of analysis, you might find that there's just conflicting signals that you sometimes may get. And this is especially true with technical analysis. And because, as powerful as technical analysis is, as flexible and as adaptable as technical analysis is, that, in my opinion, is what causes many investors to say they have paralysis by analysis. You can measure a chart based on You can measure a chart based on minute-based charts, hour-based charts, daily charts, weekly charts, monthly charts. Depending on which chart you look at, you might get conflicting different views. And even if you're looking at the same chart, if you use different moving averages, different technical indicators, different types of indicators, you might get conflicting results here. So the question becomes, how can we simplify? And I will say, as a technical analyst, when you first learn about technical analysis, you really want to learn about everything. You want to learn about all the different indicators because you want to explore. You want to see, what gives me the best signals, what gives me the best, trend analysis, if you will. And it's good that you want to explore. But when you actually come down to building a strategy, that's really when you want to actually remove as much as possible, remove as many indicators that may conflict with each other, and understand what each one of those indicators is designed to do. So today, what we're going to do is we're going to break down the two main types of indicators that we look at here. And this is regardless of whether you follow an investor like myself, or for those of you that follow any other technical analyst, it's all based on similar fundamental methodologies as to how technical analysts look at our charts. So what I want to do is break down the two primary indicators that market strategists or technical strategists typically look for. And I will show you, where the pitfalls are and how OptionsPlay addresses those pitfalls and addresses the different analysis by paralysis that you can achieve from using this, and how to avoid some of that. So that's the goal here for today. So let's start off by talking about trend analysis, because trend analysis is at the basis of all technical analysis. Trend analysis basically gives us a sense for what the future is likely going to happen based on historical patterns. It's really based on the idea that history may not repeat itself, but it certainly rhymes. Now, the most important thing when it comes to trend analysis is what we call price action. Many technical analysts will actually look at a chart with no indicators on it first before they look at any type of indicator, because any other indicator that we add on top of it, whether we're talking about trend lines, moving averages, channels, these are all confirmation signals, if you will. The first and most important thing to look at is price. So the first thing that you should learn if you are new to technical analysis is learn how to read a price chart. Now, I'll just give you a quick overview here. Here is XLU, the utilities ETF, okay? Utilities ETF. Now, this is pretty much this is the chart for 2020. From a technical analyst perspective, the first thing you would notice is throughout the beginning of the year, this was on a straight, very clear uptrend. And then it was followed by a very quick downtrend, followed by a long period of what we would call a sideways market, and recently a breakout from that sideways market back into an uptrend. This requires no technical indicators, no moving averages, anything like that. You can draw some very simple lines just looking at charts and getting a sense for the overall trend. This is what we refer to. Now, there are different metrics or indicators that you can add to it to help you kind of define or help you make sure that you stick to a specific trend. You can draw trend lines. So for example, during this uptrend, you can draw some kind of trend line like this, and then say, during this sell-off, it broke that trend line, came back to retest that trend line as support before it started to move lower here again. And then what you can draw is start drawing some bearish trend lines until that bearish trend line was finally broken here to the upside, and that ended the bearish trend. And then after a while, you can draw this kind of sideways channel, if you will, where the stock or the market traded in between this channel, and you basically wait for a breakout of that channel, and it finally happened here recently. So this is what we typically call a trend analysis on the chart. Now, like I said, you can do other things such as add moving averages, which is kind of like an automatic trend line, if you will. You can draw channels like I just showed you here before. You might draw a channel like this and say that as long as the stock stays within that channel that's within the uptrend, if it breaks below that channel, then that uptrend is over. These are the different tools that technical analysts use to gain that directional view. Now, what I want to show you is not only how we go about doing this, but how OptionsPlay automates some of this work for you. But the primary use of these trend analysis is to gain the view as to whether I think the stock or ETF is going to go higher, go lower, or trade sideways. Because based on those three outcomes, I would choose an appropriate strategy for it. If it's in an uptrend, I would look at bullish strategies. If it's in the downtrend, I would look at bearish strategies. If it's in a sideways market, I would look at neutral strategies. And this is really where options trading comes into play, because I need to first have a directional view before I can trade an option strategy off of it. So this is the first thing that we want to take a look at. But the problem with trend is that it only tells you how a stock is performing, or an ETF is performing against itself. What it doesn't give you a good sense of is how is it doing relative to the market. So here is the chart of XLU. This is the price chart of XLU that I'm showing you on the chart. And the next slide, what I'm going to show you is the XLU chart relative to the market. And the one thing I want you to remember here is remember this part. This is basically from April through roughly October or so. As you can see, XLU was largely sideways. It traded basically between a resistance level, a support level, resistance level, support level, trading sideways. Now, when we look at XLU, so when we think about the sector itself, it's moving sideways relative to itself. But one of the most important metrics that technical analysts look at is not only what is the trend of the stock or ETF relative to itself, but how is it doing compared to the overall market? And that's where we turn to a metric that we call relative strength. What this does is it compares the asset's performance compared to the broader market or to another index, such as the individual sector that it's in. So when we're looking at a sector like the utility sector, we'll usually compare it to the market. When we're looking at a specific stock, we usually compare it to the overall sector. And what you'll notice here is during that same time of that April to October timeframe, instead of moving sideways, as you can see, the relative chart was actually lower. So what that means is that during this time, when XLU was moving sideways, the rest of the market was not moving sideways. The rest of the market was moving higher. So relative to the market, XLU wasn't moving sideways. It was actually underperforming the broader markets. And this is important because when you're thinking about an asset, when you're thinking about an investment, if you think about the fact that you can put your money anywhere in the market, and let's just say there are 11 sectors in the market, where do you think a portfolio manager, whether you're an institutional portfolio manager or a retail trader, why would you want to put your money in a sector that's moving sideways when the rest of the market is moving up? The answer is you don't. That's why it's so important not just to analyze whether a stock is moving higher or lower, but is it moving at least on par with the broader markets? Because at the end of the day, you could have a stock that's moving higher, but if the market is moving substantially higher, then if you own the stock, even though it's going higher, you're underperforming the market. So what you generally want to do is you want to sell stocks that are underperforming the market and buy stocks that are outperforming the market. But how do you know which stocks are underperforming or outperforming the market? And that's really where we turn to relative strength metrics. And there are plenty of different relative strength metrics that help us analyze this. We usually take a look at, a stock or sector against the market. We can also look at that stock against its sector. And for those of you that use services like stock charts, stockcharts.com, they offer relative strength ranking indicators that give you a sense for, how does a stock perform compared to the market? It's usually on a score of 0 to 100 or 0 to 10 to show you which stocks, whether a stock is outperforming the market, underperforming the market, or performing on par with that market. So this is really where we turn to relative strength for that. Now, when you use both in conjunction with each other, that's when you're going to be able to get a much more complete picture as to the trend of a stock, but also whether or not it is what we call in favor or in season or out of season, if you will. We usually think of relative strength as, and it may not be the easiest analogy to understand, but think about, what's in favor and what's not in favor. That's what relative strength is telling us. And the trend analysis tells us how it's doing compared to itself. So the challenge here, though, is the fact that when you're looking at trend analysis, there are a lot of different ways you can measure trend. You can use trend lines, you can do moving averages, you can do channels. Let's just focus on moving averages here for 1 second. A lot of us use moving averages. It's for all intents and purposes an automatic trend line. And it gives us a sense for whether the stock is trending higher or lower. So we can look at the slope of the moving average. So if I drew a moving average, it would probably look something like this. And what we can look at is the slope of the moving average. The moving average is effectively smoothing out the price action and telling us whether a stock is trending lower, trending higher, and whether the stock is accelerating or decelerating. So when you have a stock that's trading below the moving average and moving lower, that's accelerating to the downside. When it's trading below the moving average but moving higher or moving closer to the moving average, it's decelerating. So the challenge here is the fact that there's lots of different moving averages you can use. You can use a 20-day, a 50-day, a 200-day. We actually talked about this on our technical analysis webinar for members a few weeks ago as to the efficacy of moving averages and which ones do you use. Do you use simple versus exponential? These are some of the things that we discussed. And the challenge here is really the fact that with moving averages, there are so many that you can use. And even within the same moving average, you could have different interpretations. And that, I think, is the biggest challenge for most investors, is that you have too many choices. You can use all different kinds of moving averages, and you can use the 20-day today and the 50-day next day and the 200-day the next day. That is what I have noticed as a market strategist over the last 15 years, that leads to the most inconsistent results from trading, is that investors are not using the same indicators day in and day out. And if you are guilty of this, please type 2 into the chat window. If sometimes you use the 50-day, other times you use the 200-day, sometimes you use the RSI, sometimes you use the MACD, depending on and sometimes it's our inherent bias, right? Maybe we think that a stock is going to go higher, so we just keep trying different indicators until we find an indicator that agrees with our bias. And this is something that a lot of traders do. And what we want to try to help prevent is that exact bias, where we keep searching for indicators until we find one that agrees with our initial views or initial biases. And how do we do that? We have 2 ways to do that. We have both a trend analysis indicator within OptionsPlay and a relative strength indicator built into OptionsPlay that uses the same application day in and day out. We use the same moving averages, and we use the same interpretation of those moving averages. And the only thing that you get is a reading of either bullish, bearish, or neutral. And we provide 1 month and 6 month trends, a short-term and long-term trend. On the relative strength side, we basically rank every single stock on a score of 1 to 10. If you see a stock with a ranking of 1 to 3, these are the weakest stocks in the market, meaning these are stocks that are underperforming the market. So even though, and these could be stocks that are moving higher, but they're just moving higher less than the market. So for example, you can have a market maybe going up 30% in a year, but if you have a stock that's only moved up 5% in that same year, that, from my perspective, is a stock that's underperforming the market. It's still moving up, but it's clearly underperforming the market. You don't want to hold stocks that are only moving 5% higher when the markets have moved up 30% higher. That's why it's so important to look at relative strength. Now, stocks that have a score of 7 to 10 are the stocks that are outperforming the market. Stocks that, when the markets are moving up 30%, these stocks are moving up 50%. Those are the ones that you want to identify if you're bullish. And then the ones that are 4 to 6 are neutral, meaning they're moving on par with the markets. They're basically keeping pace with the market. They're not outpacing, they're not underperforming the markets. So when you're using these 2 tools, the key here is not necessarily which indicators do we use or how we use them. It's the fact that we have a consistent way of using it day in and day out, so that you just get a consistent reading of the trend against the stock itself and the relative strength compared to the broader market. Does that make sense to everyone? Please type 3 into the chat window if that makes sense to you. And what I want to do is I want to show you how we can utilize this to look at some real symbols so that you can utilize these 2 indicators alone and quickly gain a directional view within seconds and not minutes, okay? And the best way to do that is to show you the different ways that you should categorize stocks. So we're going to start with bullish stocks to begin with, right? And generally speaking, as a trader, we have two general categories of stocks that we want to identify when we're looking at technical analysis. And that's either a trend following method or a counter trend method. You're either going along with the trend or you're trying to find stocks that are bucking the trend. So when we talk about trend following stocks, these are stocks that are exhibiting strong relative strength, meaning these are stocks that are outperforming the broader market, and they're exhibiting bullish trends. So the relative strength and the trend of the stock itself are all trending in the same direction. I think this is pretty simple to understand as to why you would identify these as what we call a strong bullish stock. On the flip side, you can have stocks that are what we call bullish turnarounds. These are counter trend trades. These are contrarian trades. These are stocks that have weak relative strength, meaning they're actually underperforming the broader market, but they're exhibiting bullish trends, meaning they're starting to buck the trend. They're underperforming the market, but they're starting to turn around. So those are the two types of bullish categories or bullish trades that we typically try to identify. And I'm going to show you how you can use the trend indicator and the relative strength indicator on OptionsPlay to quickly identify stocks in either category. And on the flip side, when we look at bearish trades, you have the exact opposite. We have strong bearish stocks. These are stocks that have weak relative strength and they are exhibiting bearish trends. So this is trend following. This is simply looking for stocks that are weak, that are moving lower, that you think will continue moving lower, or you can be a little bit more opportunistic. You're looking for stocks that have strong relative strength, meaning they've outperformed the broader market, but maybe they've gone a little too far too fast and they're starting to pull back and they're starting to buck that bullish trend. They're starting to turn lower. These are counter trend trades. These are more contrarian trades for those of you that like to be a little bit more contrarian. And I would say that, in the current market that we're in, it does pay potentially to be a little bit contrarian at the current moment. So there's a few different ways that you can think about, the different types of trades that you can identify. And some of us like to follow trends. Some of us like to be that counter trend trader. So it really depends on which one you're looking for. OptionsPlay can help you quickly identify stocks that fit into either one of these four categories. And we do it through our OptionsPlay watch list. Now, some of you may have seen this before and you quickly are able to identify this, but part of the OptionsPlay DNA is to take a very visual approach to everything, because we know that you have a lot of you don't have a lot of time, and you want to make sure that you're able to quickly identify opportunities, quickly able to analyze those opportunities and execute them. So one of the things that we have built here at OptionsPlay is our watch list that's extremely visual to help you quickly identify stocks within one of these four categories. So as I said before, we have strong bearish, strong bullish, we have bullish turnaround, and we have bearish turnaround. So what we're going to do is we're going to show you how this is an OptionsPlay watch list, right? So when you log on to the OptionsPlay platform, you can go to your watch list section, and whether you're using one of our pre-built watch lists or if you're using a watch list that you've built yourself, what you can do is you can sort by this column called the score. And when you sort by the score, what you get is a view that looks like this. And what I'm going to do is I'm going to show you how you can use this watch list to quickly identify stocks of a certain category. So let's start off with the strong bullish stocks. So the strong bullish stocks are simply stocks with a high score, so 7, 8, or 9, or 10, and have green across the board. The green tells me the 6-month trend. So this bar here on the left-hand side is the 6-month trend. And the thing here, and the thing here on the right, the arrows here on the right, is the 1-month trend. So between all of this, what I have is access to the technical score. This is the technical score here. So what I'm able to do is quickly identify the relative strength of all stocks in my watch list. I can sort it by the score. And based on the 6-month and 1-month trend, quickly identify stocks that are either strong bullish, strong bearish, or starting to turn around from those strong trends. So let's first talk about a strong bullish stock. So what that would mean are stocks like Apple, which has a score of 8, and you see green across the board. Stocks like Schwab, which is a 9 and green across the board. FCX, Freeport McMoran, 10 and a green across the board. So without having to look at a chart, without having to pull up the fundamentals, without having to look at anything, you can type in all the stocks that you want to watch in your watch list, sort it by the score, and immediately I can tell you Apple, Schwab, and FCX. Even if I know nothing about these stocks, these are strong stocks that are continuing on their bullish trend. Vice versa, I can tell you that Intel and COG are weak stocks because they have a score of 1 and 2. And as you can see, it's red across the board. So these are really easy to identify. The ones that are all green, all red, with either high scores or low scores. Now, when we look at the turnaround trades, they are also fairly easy to identify. So if let's say you want a bottom fish, you're looking to pick some bottoms, you think some stocks that have been beat up so badly that they're starting to turn around, well, you can also do that fairly easily as well. As you can see, Bristol-Myers, Nordstrom, SJM, Smuckers, they all have low scores, but as you can see, they're green across the board. And we're going to go through these in a second here. I'm going to show you the actual charts. But what I want to show you is how you can actually identify these stocks without looking at a chart. Because the challenge also is, even if you're very good at reading a chart, is that you still have to manually go through all of those charts and do the work. Here, we're trying to prevent that as well. We're trying to give you pre-screen your charts so that you don't even have to look at a chart and quickly know that Bristol-Myers is starting to turn around. And I haven't looked at the chart of Bristol-Myers in a while, but when I look at this watch list, guess what? That's going to be one that's going to be on my watch list. That's going to be one that I want to watch here now because I think it's starting to turn around. Nordstrom as well. Some of the department stores really have been doing very badly, but Nordstrom may be starting to turn around here. Smuckers also in the consumer staples space, falling behind substantially during the coronavirus, may be starting to turn around. These provide an idea generation tool for you that you can find without having to look at any charts. And these are stocks perhaps in your watch list that you're familiar with. So maybe you're just waiting for the signal, and this provides you with that signal. On the vice versa, on stocks that are really strong, but maybe starting to fall behind, maybe starting to show some cracks here, as you can see, Twitter and Weyerhaeuser. These are the stocks that are very strong, but starting to turn lower here. Now, the 6-month trend hasn't turned bearish, but it's neutral. Same thing for Weyerhaeuser. The 6-month trend hasn't turned fully bearish yet, but the 1-month trend has turned bearish on both of these stocks. So if you're looking to find stocks that are starting to crest from their peaks, these are stocks that you can identify. And this is really how you can utilize the OptionsPlay watch list. And I'll show you what we have built here. Not only have we built watch lists for the stocks that you want to own, but we also have built the sectors. When you go to the watch list section, the first thing that automatically shows up are all 11 sectors. And it'll show you how all 11 sectors are currently performing. And this is really important for investors to quickly gain a sense for whether a sector is underperforming or outperforming the broader markets. So as you can see, energy, a score of 2. This is showing you that energy is underperforming the broader markets. And I don't think that's a surprise to anyone. But as you can see, what's the strongest sector right now? It's actually industrials. Industrials, consumer discretionary, materials. That might surprise you because many of us might be thinking that technology is really the strongest sector, but obviously technology over the past couple of weeks have really taken a big hit and has moved substantially lower down the list. And this gives you a very quick sense of which sectors are outperforming, which sectors are underperforming, and where you want to find opportunities. So when we search for daily play ideas, many investors have asked us over the years, how do we find these ideas that we send out for trade ideas? And the answer is we always do what we call a top-down approach. We always start with the broader markets. So we look at the S&P 500, we look at the Qs. We first gain a directional view based on that. And that's predominantly based on looking at the price action of SPY and QQQ. That's what I do a lot of my work on, on every Tuesday and Friday morning during our market outlook sessions, to inform you as to what the broader market view is. Because once you have that broader market view, that's when you can then start looking at sectors, and then that's how you can then identify stocks. So when we're looking for high probability setups, what we're looking for is really, first of all, a fairly bullish market, or a market that we're fairly bullish in. And then what we want to do is we want to find bullish sectors within that bullish market, and then look for bullish stocks within that bullish sector. I'm going to show you how you can drill down into this using the OptionsPlay tool, and that it becomes our buy signal. And vice versa, when we have a more of a bearish view into the markets, that's when we can then identify weak sectors and then identify weak stocks within that sector, and that's how we generate our sell signals. But the OptionsPlay watch list tool, when you first log in, the first thing it does is it shows you all 11 sectors and where they currently stand, both from a trend perspective as well as from a relative strength perspective. So, from my perspective, the best way to teach you guys this is by showing it to you using the OptionsPlay tool. So let's log in and take a look. Let's first start off with the sector spiders. So this is usually where I start my day. I want to look at what sectors are moving, which sectors are strongest, which sectors are weakest. This gives me a good sense of the landscape, because depending on whether you have a bullish or bearish view on the market, you generally want to focus your attention on some of these sectors when you're looking for bullish opportunities. And if you're looking for bearish opportunities, you generally want to focus on some of the weaker sectors. So if, let's say right now we're bullish in the markets, which, when I'm looking at SPY, let's take a look at SPY real quick. And this is something that we do every Tuesday and Friday morning. We'll take a look at where the markets currently sit. One of the things that I still contend is that SPY, despite this, false, I'm going to call it a false breakout for now, despite that subsequent breakout we had on that vaccine news, my general take is that SPY is very much in the sideways range-bound view. That's my view as a market strategist, because you have multiple tops that have held, and despite this one-day move to the upside, it quickly gave most of those gains back, and we're sitting now below that major resistance level. And then we have these support levels that have held for the past couple of days. So my view, especially in the current environment that we're in with rising COVID cases around the world, my view is a little bit more on the bearish side of things. And that's why we took the bearish Intel trade. That's part of why we're maintaining our QQQ hedge on the broader markets, is because it emanates from this first view of the broader markets. Now, once I have this view on the broader markets, then I can start taking a look at some of the sectors, and I can maybe look at energy as a starting point. And what you can do is we have built all of the sectors using this tool. So if I want to look at energy, I can quickly drill into the energy sector, and I can look at all the stocks within XLE. And again, based on the color coding that I just showed you, I can focus on the weak stocks that have red across the board. I can focus on the weak stocks that are relatively, as you can see, a lot of the stocks have started to move a little higher here. So look at Kinder Morgan, right? So this is inherently what someone might look at and say, okay, this downtrend here in Kinder Morgan, it's done. That's why it's broken out here to the upside. That's why, despite the fact that it's got a score of 2, it's not red across the board, because the downtrend is over and is starting to trend a little higher here. Now, the question is whether you believe that this trend can hold, or you believe that this is going to continue moving lower. Now, when I look at the broader markets, when I look at the energy sector, I would tend to believe that it's more likely that it's going to continue moving lower, but that's how I look at the markets. And notice how I'm able to make that decision within a few seconds, and identify stocks that may have an opportunity for this without having to spend hours and hours going through ticker by ticker by ticker to look at specific sectors, specific stocks, because for those of you that spend your time on platforms like TradingView, right? And I use TradingView a lot in my analysis. You guys see it in my work every single week on our Tuesday and Friday morning sessions. The problem with looking at charts is that you got to go one by one, right? So if you're looking at all the sectors, I got to look at materials first. Okay, I see that it's relatively strong. And then I look at industrials. I see, okay, that's pretty strong. I look at communications. I see that that's okay, not as strong. And then you have to go one by one. And only after all of that do you get a sense. And then it's hard to then, again, go back and say, okay, which one is strongest? Which one is weakest? It's a lot of work. And then what I have to do is then I have to look at these charts relative to the market, right? Because then I have to look at, well, how's materials doing compared to the market? How is communications doing compared to the market? Now, this is important work, but OptionsPlay automates all of that for you into our watch list function so that you get the work that I do manually every single day in an automated fashion in your watch list. So if, let's say I'm looking for bearish opportunities, first of all, I know that I'm going to probably look at energy. I might look at healthcare as well. And then if I want to drill down into the energy sector, then I want to take a look at, okay, COG is a weak stock and the 1 month and 6 months trend is bearish. So I can quickly look at some opportunities here for potentially a bearish opportunity in COG. If I'm looking for more bullish opportunities, I might focus on some of the stronger sectors. So if I go back to the sector ETF, and let's say I'm looking at financials, maybe I drill into the financials. As you can see, that's where I found Schwab before. Schwab was a very strong stock with bullish trends. As you can see, strong stock with bullish trends. And this allows me to quickly identify bullish opportunities. And you can do this for any, and you can create your own watch list. That's what I did here before. I created a watch list here. Whoops, wrong watch list. I created a watch list here before that allowed me to quickly look at different stocks and identify, okay, Intel is a weak stock, very weak stock with 1 month and 6 month trends that are bearish. That's why we chose Intel as a bearish trade the other day, is because of this analysis. And this is something that you can do on your own using the OptionsPlay tool. If I'm looking for a turnaround trade, maybe I'm looking at Bristol Myers. As you can see, this is a stock that clearly, during the time when markets have been moving higher, this stock has been moving sideways. This is not always quick to easy to do this work, because you would have to do BMY divided by SPY. And as you can see, if you look at BMY compared to SPY, notice how during that sideways movement, the stock is actually moving substantially lower. This is one of the weakest stocks in the market. But as you can see, it's starting to move a little higher here. And this is really the clues that we're looking for. Perhaps Bristol Myers has started to move to the upside. And maybe for those of you that are bottom fishers and you're looking for opportunities that are on maybe cheap stocks and you're trying to find stocks turning around, that's how this tool allows you to quickly do. Same thing with Nordstrom, right? Underperformer on a long basis, recently broken out to the upside. Is this a continuation to the upside? At the end of the day, this in itself is probably not enough for you to go out there and say, okay, let me buy Nordstrom's. You might want to do a little bit more research. You might want to look at some of the fundamentals. You might want to look at when earnings are coming up. You want to look at some other data, but this helps you quickly screen for ideas so that you're not starting in a vacuum every single day. You're not starting from scratch every single day. You have a short list of stocks that you want to take a look at. So for me, Smuckers, I haven't taken a look at Smuckers in a long time, but is it time to start taking a look? Perhaps. Maybe when I look at this chart, I say, okay, that's not really interesting. But Nordstrom certainly looks a little bit more interesting than Smuckers, because look, I have this long downtrend in Smuckers that it's been in for a long time and recently broke out, right? Could this continue moving higher? That's where I'm going to do a little bit more research. I'm going to look at some other department stores. Maybe I'll look at Macy's. Maybe I'll look at some retail sales numbers. That's going to give me the confidence to then decide, okay, this is the trade that I'm going to make. But at least at that point, the research that I do here on Nordstrom, I know is going to be worth it, because if the fundamental data agrees with me, I know I found myself a stock that I'm going to trade. And I can easily use the OptionsPlay tool to look for an opportunity to trade this. I might use a debit spread like this, or I might sell a credit spread depending on my views on the underlying stock, and be able to quickly analyze this trade and say, okay, if Nordstrom gets back up to $20, how much money do I make on a debit spread? 204% return on this debit spread. Okay, that's a trade that I might be interested in taking a look at. That's the view that I'm able to place that trade in. This is designed to help you greatly reduce the amount of time it takes you to find ideas and decide which stocks do you want to do a little bit more research on. And looking at Twitter, we've been looking at Twitter for a while. Twitter has been on a very, very strong uptrend for a long time. And the recent earnings announcement really took it down a notch. And as you can see here, it took it down a notch, came back to retest this level as resistance, and has recently been rejected at that level. If we want to zoom in a little bit. So the big decline on earnings, came back to retest this resistance level, and is now starting to move lower. So for those of you that are a bit contrarian, you're looking for some opportunities, maybe here's a short opportunity here on Twitter. Maybe you dig a little bit more into the fundamentals and you see, hey, this stock has run up, let's see, maybe 100% since the bottom here. $20 to $50, almost 150%. You look at revenues and you say, has Twitter revenues gone up by 150%? Maybe you say to yourself, no, revenues have only gone up 10%, 15%. The stock's up 150%. Hey, this doesn't really make a lot of sense. The fundamentals don't line up with where the stock is trading. Now, maybe this is an opportunity to short the stock. But at that point, when you look at that fundamental research, when you look at some other research that you're looking at, you know that if that research lines up with this view, you have a trade on your hands. And that's why we designed OptionsPlay the way we did, is because as traders, myself, we spend too much time trying to research ideas. We waste too much time looking for ideas. This was designed to allow me to quickly identify potential opportunities within a few seconds so that I don't waste time searching for things or researching things that are not worth my time. Weyerhaeuser, here's another one. Lumber stock. Lumber has been doing very well during the coronavirus, but, largely, as you can see, over the past, pretty much since the beginning of September, this stock has been moving sideways. It's actually starting to move lower a little. So very strong stock, right? Technical score of 9. But as you can see, the trends have started to deteriorate. It started deteriorating here in mid-October. So the stock hasn't broken down yet, but this is where you want to search for opportunities before they break down. You don't want to wait for this stock to get down into the low 20s and then find this as an opportunity. You want to find these opportunities now. And then what I would do is I would look at some of the fundamentals and say, where are the fundamentals of this stock? The stock has rallied substantially again from the March lows at $14. It's doubled the stock price over the last 8 or 9 months. Are revenues anywhere near where it was back here in February? Have revenues grown this amount since since the March lows? If they haven't, then perhaps you have the thesis for a short here. But if they have caught up, then you might say, okay, this is not the trade for me. The fundamentals seem to line up. Let me move on to the next trade. It's not that you're always going to be able to find opportunities, but this helps you find opportunities much, much quicker. And what I'm going to do real quick, just for a few minutes, I'm going to give everyone an opportunity to type in a stock, preferably a large cap stock, type it into the chat window, and we're just going to go through some names together. And I want to show you how quickly you can utilize this tool to find some ideas. So let's do it. Nina said RH, Restoration Hardware, very strong stock. 1 month and 6 month trends are bullish. So from my perspective, this is a stock that has no, and looking at this chart here, there's nothing here that indicates to me that anything has started to turn around. As you can see here, for a couple of days here between October 27th and 30th, the stock started to break down, but very quickly recovered. For me, that's a pretty bullish indication when a stock, is able to recover very quickly from that. And that's a high conviction for continuation higher here. Wow, so many symbols. I'm going to try to get through as many as I can here. GE, General Electric, very strong stock. 1 month and 6 months trend was bullish. Now, I will say here, we would have identified this back here on October 16th. That's when the 1 month and 6 month trend turned bullish with a score of 9. So we identified this stock as a bullish trade here on October 16th before this breakout here. That's really where you want to utilize this tool. If you had GE in your watch list on October 16th, you would have seen that it both turned 1 month and 6 month trend turned bullish when it was trading at $7. That was an opportunity to potentially go long here. Apple, Apple right now still very strong stock. 1 month and 6 month trend resumed bullish here back here on November 4th. From my perspective, I still think there's fundamental thesis and a technical thesis for this to continue moving higher. Fastly, FSLY. This was a very strong stock, but as you can see, ever since that recent earnings announcement, or I forget if it was the earnings or the announcement that TikTok was no longer really utilizing them, the stock has pretty much been in a downtrend. Here, in my opinion, is an opportunity to potentially look for further downside here in a name like Fastly. OXY, this is a stock Occidental. So very weak stock, but starting to turn around here. As you can see, the 1 month and 6 months trend has turned bullish here just a couple of days ago. So the question is whether or not you think this support level is going to hold. That's more of a call on whether you believe that oil can recover or not. But from my perspective, if you are in the camp that you think this is going to recover, this is an extremely attractive risk to reward ratio. You got the initial bump, came back to retest this as support. And if it's going to move higher, the risk to reward ratio on this long entry is extremely attractive. AAL, whoops, that's Alcoa. AAL, American Airlines. Similar type thing. Notice how you had that huge vaccine news breakout here, but has now resumed back into its bearish trends. So neutral stock from a relative strength perspective, 1 month and 6 months trend is bearish. I think that you're more likely to see this continue to fade here. PLTR, so Palantir just started trading. So first of all, we just don't have we don't have enough history to analyze trends. So for this, I wouldn't be able to really help you out per se. UPS, very strong stock, but starting to turn around here. This was one that I was looking at earlier today because it recently just started to turn around here. So, and if for those of you that are astute technical analysts, this is starting to look a bit like a head and shoulders formation here. Is this going to start to turn around here? Maybe these stocks got a little too ahead of itself because UPS, FedEx, these stocks have gained, from the lows, $80 to $163. You're talking about 100% growth here. Have revenues for UPS grown 100% since the start of the coronavirus? I don't think so. And maybe the markets are starting to say, hey, maybe we need to come back to reality. This is a signal for me that traders are starting to reanalyze the same thing for FedEx. FedEx even higher from $89 down up to $267. So trends are starting to deteriorate. Look at this. Now the 6 month trend is still bullish here, so it's still hanging in there. If the 6 month trend starts to turn bearish here, this is one where I would put into my watch list. And if you start to see FedEx trends turn lower, that could be the start of a move to the downside. mRNA, if I'm not mistaken, that's Moderna. Moderna turned again positive here on November 5th. So if you had Moderna in your watch list, it is neutral, but started to turn higher here, starting to break out above that resistance level. So, this is a stock that I think is headed lower. Headed higher here. We already talked about GE, AAPL. We've already talked about that. FedEx, we've talked about that. BABA, let's look at BABA. It hasn't been 5 minutes yet. I've gone to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades already in 5 minutes. This is how you can utilize this tool to quickly allow you to gain that directional view. BABA, very neutral score. 1 month and 6 months trend has turned neutral, has turned bearish here. Actually turned bearish here on November 9th. So before this move to the downside, 1 month and 6 month trend turned bearish here, giving us a bit of a warning signal that things were starting to deteriorate. Things are starting to turn lower here. And so far, BABA continuing to move lower here. And especially when you use this in conjunction with support or resistance levels, notice how right now it's sitting just above that support level. If tomorrow it opens up below that support level, that's another signal that this is going to continue moving lower here. So there are a lot of different ways that you can utilize this tool in this particular way. Now, there was no way that I was going to be able to get to all of your signals, but I hope that this gave you some idea as far as how you can do this. And I purposely did this quick rapid fire session because I'm actually doing a session next week on Friday morning at 8:30 a.m., a members only session, a rapid fire analysis session, where the only thing we're going to do is for all members, you're going to receive an email to get access to this special webinar. All we're going to do is allow you to submit symbols, and we're going to look at them together. We're going to look at it using OptionsPlay. We can look at the option strategies on the back of that, but we really wanted to provide a session like this for members because a lot of you want a time to be able to submit your symbols and for us to look at them together. So I want to be able to provide that forum, but because there's too many people on these webinars, I can't get to everyone, so we are restricting this to members only. So if you're a member, you're going to get an email tomorrow morning at 7 a.m. to register for this. In that same email, if you're on a free trial, or if your trial has expired, or if you don't have an account, you can we'll show you how to access or activate your membership so that you can join us next Friday. So next Friday's session, instead of doing a market outlook session, we are going to be doing this rapid fire analysis session where you can submit symbols, and I'm going to take a look at the symbols that you guys submit. So with that, that covers what I wanted to share with you here today. I hope that this was helpful in giving you a better understanding, number one, what are the use cases of technical analysis, how you should be thinking about technical analysis, predominantly to help you identify trend and predominantly helping you identify which stocks or sectors are in season, which stocks are out of season, because that is how you can have high probability setups. And you always want to make sure you line up the market analysis with the sector analysis with the stock analysis. If you have all of those lined up, you're going to get higher probability trades. So when you have a bullish market, look for bullish stocks within bullish sectors. When you have a bearish market, look for bearish stocks within bearish sectors, or bearish stocks within weak sectors. So with that, what I'll do is I'll open this up for Q&A. If you have any questions, please type them into the Q&A window. We have both a chat window and a Q&A window. So if you have some questions, type them into the Q&A window, and I'll try to answer as many questions as I have time for here today. So David's asking a good question. He's saying sometimes there's an asterisk next to the bearish sign. And the answer, and what does that mean? And when you see the 1 month and 6 month trend, sometimes there's an asterisk sign. When you mouse over, it'll show you it's overextended. What that means is that the 1 month trend to the downside, even though it's bearish, sometimes you can get too bearish, meaning you've effectively exceeded the Bollinger Band. So here's just to show you how the sausage is made here. What we're really doing is we're looking at the Bollinger Band, and what we're saying is that despite the fact that it's bearish, it started to exceed the bottom of that Bollinger Band. So this doesn't include, this does include today's candle here. So Alibaba down to 264, starting to get overextended here. So even though it's bearish, there is a higher probability of a little bit of a check back here before it continues moving higher. So it just gives you a little bit of warning that, it's moving to the downside, but it's already gone, quite a bit to the downside. It's almost a little overextended. So that's what the asterisk sign means. Great question, David. Ed is saying, is there a way to filter to identify when a stock turns positive on 1 month and 6 month basis without hunting them down one at a time? So Ed, that's what I'm saying, is you don't have to hunt them one at a time. You can just use this score. So I think what you're trying to say is that when they actually turn positive, and that, Ed, that's exactly what we're currently in the process of building, is some more filtering so that you can identify, strong stocks that just turned positive today or just turned, bullish today. We don't have that just yet, but that is something that I'm working on. What is the name of the webinar to close or exit vertical spread? So Jorge, we don't have a separate webinar on closing. We do have a separate webinar on each type of spread. So if you want to sell credit spreads, within that webinar, we do talk about the rules for exiting. If you're trading debit spreads, within that webinar, there are rules for exiting debit spreads as well. So just find the webinar for the strategy that you want to trade. We'd always talk about the exit strategies within those webinars. Ben, yes, you will get a recording of this later. Wayne is saying, how can Fastly still have a 9 technical score after dropping like a rock? Well, it really comes down to the fact of how strong it was prior to the drop here. So it's still outperforming the broader markets. Now, the thing about the technical score is that it's it takes a long time for the technical scores to change substantially, because when we talk about underperforming or outperforming the market, we really don't want to do it on a too short of a basis, or else you just get whipsawed all the time. So we're really looking at the fact that this stock, despite the fact that you've had this big drop, is still, largely outperforming the broader market. The stock went from $20 here in May to 76. The markets have not, that's basically tripling in the last 6 months. Has the market tripled in the last 6 months? The answer is no, which is why it still remains one of the strongest stocks in the market. What's your view? I'm not going to take any more symbols just yet. If you want to submit symbols, make sure that you join us next Friday during our rapid fire session. So if you have a membership, you're going to get an email tomorrow morning at 7 a.m. If you don't have a membership, in that email, we'll show you how to activate your membership. How do you estimate target prices? So most target prices are based on support or resistance levels, prior support or resistance levels. If you're reaching a new all-time high, there are other forms of analysis that we do. We usually use projections to get a sense for target prices, but that also is an art, not a science. There isn't a science to generating target prices, to be perfectly honest. Any tools for bottoming formation? So, like I said, you want to utilize tools like this. So I've identified Nordstrom as a bottoming formation. I've identified Smucker's here isn't particularly a strong bottoming formation. So it's not that every single chart is going to line up exactly, but Bristol Myers likely, I think, a potential bottoming formation. Trading sideways, meaning underperforming the broader markets pretty much since the beginning of the year, but starting to break out here to the upside. So this has potential for further upside here. Is your relative strength only comparing the stock against, say, an index like S&P? So Harley, our technical rank is not actually comparing a stock against the market itself. We're actually ranking every single stock against each other. So as one stock outperforms the other stock, it has a higher rank than every other stock. So we're actually comparing stocks against each other as opposed to the broader market. But it's based on the concept that stocks that outperform the market will continue to outperform, and stocks that underperform the market will continue to underperform. Ralph is saying, Tony, in a strong trending stock, what would be a good overbought, oversold indicator for entry points? So in a strong trending stock, overbought, oversold indicators are not particularly useful. Overbought, oversold indicators are much more useful in a neutral market, in a sideways market. That's when overbought, oversold indicators are going to be more useful. I do tend to find that if you're going to use overbought indicators, so for example, if let's say we use, what's a good stock to use as an example? Let's use Weyerhaeuser for a second, right? So during this uptrend, this is what I would consider a strong uptrend. The type of indicator that tends to work best, in my opinion, are stocks are things like stochastics. Whoops. Already added it, sorry. What have I done? I've accidentally. During this type of uptrend, if you want to try to identify these types of entry opportunities, I tend to find stochastics are, one of the better ones for this, because stochastics does pull back even in the strong uptrend, versus if you look at RSI gets back below 30 in these strong uptrends. So when you have a strong uptrend, CCI sticks, those are the types of indicators that tend to, even in a strong uptrend, will still pull back into that oversold territory and give you that buy signal. So that's the way that I think it's best. And even MACD, stochastics, those are the ones that give you a buy signal even in a strong uptrend or downtrend. Jim is saying, can you describe the 3 plays on the right-hand side of the screens and the scoring? So the 3 plays are always going to be simple, which is the stock trade. The stock trade, a simple option strategy, which is a single leg call option or put option, and then a vertical spread, which is the more complex spread. The score is referring to the risk to reward ratio. So most platforms will give you something like this. You see how it says max reward here is unlimited, max risk, 6,200, 287. Here's a max reward here's a max reward of 514 versus max risk of 236. If you were looking at these three strategies side by side, which one gives you a better risk to reward ratio? The answer is you can't tell because they're completely different. You're comparing apples to oranges. So that's why we created the OptionsPlay score, so that you can actually compare apples to apples, the different types of risk to reward metrics. So that's what the OptionsPlay score is telling you, which one gives you the best risk to reward metric based on a reasonable trading range of this particular stock. How is the score smooth? It's because of time. It takes into a long amount of time into consideration to smooth out the technical score. Please walk through the clicks on the system to see the market trends, sector, and stock. Oh, so when you click on the watch list, the first thing that will show up is the sector spiders watch list. So whenever you go to the watch list tool, this is going to be the first one. I always click on the score to sort all the stocks, all the sectors from weakest to strongest. This way I get a very quick reading without having to do any work, which sectors are weakest, which sectors are strongest. Now, once I've identified a sector that I want to drill into, I can use the drop-down menu and look at a specific sector. So if I want to look at utilities, I can click on utilities and look at all the stocks within the utility sector. And then again, using that visual approach, say, okay, if I'm looking for bullish opportunities, I'm going to focus more on the 7, 8s, and 9s and the ones that are green across the board. Those are the ones that I would focus on. American Waterworks is one of the ones that I focused on here on Options Action last week. This was one of the strongest stocks within the utility sector that was still trending higher here. And that's why I picked AWK for my my options action trade last Friday. John is saying, if I sell a call and can absorb the share, would that be a decent strategy? Like instead of going short on a stock, selling a call, and if it works out, great. If not, I'll convert to a short position at the strike price. So John, if you want to take a short position at the strike price, then yes, selling a naked call option is a perfectly valid strategy to do so. You might want to sell a strangle instead, to be perfectly honest, because if you're bearish on it, or if you're okay taking that short position, then selling a strangle would effectively double the premium that you collect. And it gives you a potential opportunity to exit that trade if the trade does go lower. So, you can sell a naked call, but also take a look at selling a strangle. Joseph, yes, we are looking to move towards real-time quotes. Dean, that screen you just showed with all the settings, is that administrator only when explaining the asterisk? No, this is the same screen that you guys all have access to. There's nothing that I'm showing on my screen that you don't have access to right now. Oh, you're referring to no, you have access to it as well. You see there's a little expand button here on your chart. You can click on this and add studies to it. If you want to add some studies, if you want to use Chaikin Money Flow, you can add that to your screen. The only options in the tool are call, put, and verticals. What about other strategies? So Sergio, all these strategies are here. So if you want to modify this and you want to trade a vertical spread or a condor or a butterfly or any of these, you can trade them. You can use the strategy constructor to construct any strategies. If you want to do a call butterfly, if you want to do an iron butterfly, an iron condor, you can click on, you can do that with the click of a mouse. And we built this in a way that allows you to quickly select, your strike prices. You can move all the strikes up one, you can move all the strikes down one, you can make it wider, you can make it, make the wingspans, you can change the wingspans, just all by the click of a mouse. So I think we have about 45 different strategies that you can construct using OptionsPlay. Is there a way to see what stocks are good ones for credit spreads? So, we actually have a whole webinar on this, and we actually have a section on our platform called credit spreads. When you click on the credit spreads link at the bottom of the tool, that actually takes you to the optimal credit spreads that our platform scans for. So these are stocks that we think are best for credit spreads. And many times, investors, what they do is they sort by IV rank. They want to sell credit spreads when IV ranks are really high. So, Amazon, PayPal, Alibaba, Take-Two, these are all ones where the IV rank are the highest. And these, so for example, Zoom has a high IV rank, and we're collecting 40% of the width here. So this is one that I would identify as a potential opportunity if I was selling credit spreads. This is actually one that I identified on the Tuesday session here with Tom Sosnoff, was really, because IV rank on Zoom was extremely high. I thought the stock was oversold, and we looked at analyzing a bullish put credit spread here. And here's one that automatically selected for you based on that. So a lot of tools available for those of you that like to sell credit spreads. I have a whole webinar just on that alone. So for those of you that want to watch that video on YouTube, I highly recommend that for those of you that are interested in selling credit spreads. Some tickers show with the OptionsPlay logo next to them. What does that emphasize? If you're referring to the trade ideas section where there are OptionsPlay logos next to some of them, this is just simply referring to a stock that generated multiple signals. So as you can see, this particular stock at its home generated a William percent R bullish crossover, as well as a CCI scan. So it basically triggered multiple buy signals, if you will, from different technical indicators. That's how you get an OptionsPlay score. Is there a way to find unusual options activity using this tool? So Vinay, that is something that we're currently working on. I actually have an early version of unusual options activity, but I will say, if you ask any professional whether unusual activity has shown to provide any alpha for retail traders, the answer is no. You following big trades is not going to generate any more profits than basically randomly selecting ideas, to be perfectly honest. But I know that a lot of investors want this, so we're building some tools for it, but I'm not a big fan of it, to be perfectly honest. Is the 1 month approximately 20 days and 6 months approximately 100 days? So we use the 20-day and the 200-day for the 1 month and 6 month trend, but we actually use a triple moving average. We're looking at the 20-day, the 50-day, and the 200-day, and the combination of how those three moving averages are moving in conjunction with each other to gain our directional view. How can we use OptionsPlay to analyze existing stock with a potential option strategy combined? So Ben, you can always add a stock leg to any strategy. So if, let's say I'm looking at, let's go back to, let's say Goldman Sachs. You can always, for any strategy, go to modify and add a stock leg to it. You can add, however number of shares, if you're long or short, you can analyze it, and then you can use the P&L simulator. And what we're going to be analyzing is the combined strategy of your stock leg plus the option strategy that you have on top of it. Dean is saying, for watch list, are you thinking about functionality that would allow us to add price points and alerts? I'm not sure what you mean by add price points to a watch list, because the watch list has the price. If you're talking about adding alerts to it, that's not something we currently have, but it is something that we are considering. So I will say that it's something we're considering. I am new. Where do I find the webinars? Great question. They are all on our YouTube channel, which is youtube.com/optionsplay. I will post a link to everyone here into the chat window. So there, just posted a link into the chat window. Jose, unfortunately, the recording with the session with Tom Sosnoff, there was an issue with that recording, so unfortunately lost that. But I have Tom coming back here on January 12th, so mark your calendars. We're going to be doing another session similar to what we did here today. Look at trades together. look at trades together and answer your questions. So January 12th, the next time we're going to do another one of those. Sometimes there is an arrow on the chart pointing up. Is that a buy or sell signal? Those are our bullish and bearish ideas. So if you click on any bullish ideas, you'll see the arrow. The arrow points to when the idea was actually generated. Eduardo, when the debit spread, when the debit spreadsheet will appear on the OptionsPlay site. I actually believe that we'll have the debit spreadsheet next week, actually, Eduardo. Where do we find the webinars? I just posted a link into the chat window with the YouTube link for you to watch all of our other videos. How do you find retail data on cyclicals? William, so, one of the, I would say, I got this question today. One of the best, I would say, websites for all data is really the St. Louis Fed. The St. Louis Fed publishes all kinds of economic indicators. We're talking about tens of thousands of different indicators. There's all types of series. And you can just simply search for it. As you can see, they carry 767,000 types of economic data that they publish. So I highly recommend it. They have Excel downloads. They have APIs that you can use for those of you that are looking to build platforms off of it. There's a lot of great information. So I highly recommend you to take a look at that. Wayne is saying, Tony, does the platform watch list score take into consideration the options liquidity and underlying stock volume? So Wayne, it does not currently. We're still in the process of building liquidity and Ivy rank into our platform, but that is coming next so that your watch list, you can actually sort, and even your trade ideas, sort and filter based on liquidity. Is the technical score calculated based on relative strength? So the technical score is a relative strength ranking. I'm not sure what you mean by based on relative strength. The technical score is a relative strength indicator. How do you know if we are not too late to get in? Great question. The question is, how do we know if you're not too late to get into a specific stock? So this is really why not only do we show you the 1 month and 6 months trend here up top, we actually show you how long the stock has been in a trend. So for example, if we look at a stock like, let's take a look at Zoom, right? If we look at Zoom, and when the stock was trading in the 500s, notice how long it had already been in a bullish trend for. Recently, it started to move to the downside here. And notice how short it's been in this bearish trend for. It's only been in the bearish trend here for 3 days or so. So that's how you can get a sense for whether you're too late or not. You can take a look at how long the stock has been in the trend for. The longer the stock has been in a trend for, the more you are too late, if you will, to the party. How do I contact you about my account? So Deborah, at the upper right-hand corner, there's a section called Questions Ask Us. Type in your question there and you can contact our support team directly on our platform. I don't see directional. So Tyler, that was just the watch list. So the question is, he doesn't see the directional edge watch list. This is just a watch list that I created and I named directional edge and I put these symbols in it. You can create your own watch list and you can name it whatever you'd like. I just happened to name that one directional edge, so I remembered it for this webinar. Will members get the recording of the latest sessions with Tom? So Tyler, normally all members would get it. However, unfortunately, we lost a recording for that one, so I apologize for that. I believe that momentum is a very large, important piece of information that would be helpful to options traders. How do you manage this using the OptionsPlay platform? So, all of our trade ideas are generated off of momentum indicators. So, well, for example, if let's say I look at all of the trade ideas here, these are all, stocks with a score of 9 that are bullish. These are all stocks that have momentum on your side. So not only is the stock strong, not only are the trends bullish, but the momentum, as you can see, just recently was oversold, which gives you a higher probability of the stock moving higher here. So I agree, momentum is an important piece, and that's why we scan for bullish opportunities, and that's how we can utilize them for your trading. Are all those stocks on watch list only taken from the liquidity list? No. So this is all stocks. The liquidity list is separate. The liquidity list here is at the bottom of your screen. That is a separate spreadsheet. which charting platform are you using? So the one that I use for all of my charting is usually TradingView. I use TradingView because I teach not only for the US, but globally. And it's really one of the platforms that has access to all global indices, stocks, commodities, futures, indicators, all of that stuff. And I can also do math operators. And that's an important part of, the relative strength piece, right? Not only do I want to know how's the stock doing, I want to know how's the stock doing compared to its sector. So I can just do a quick math operator. So WY divided by XL show me how a stock is performing compared to its sector. So before I was showing you how WY was starting to underperform, right? Showing how it's a strong stock, but the 1 month and 6 month trends were bearish. And the stock hasn't broken lower here yet. It's still moving sideways. But if you look at WY compared to its sector, right? Notice how it recently started to break down here over the past couple of days. That's the relative strength that I'm talking about. This is the breakdown in relative strength that we are capturing in this data. So that's how you're able to see this using OptionsPlay. Please walk us through the recent Twilio trade and why it may not have followed the anticipated trend upwards. Twilio was an earnings play, so simply the earnings didn't work out as well as we thought it would. That's it. There's nothing more beyond that. Why do vertical spreads start with a buy to open and sell to open versus a sell to close? So just to be clear, a close is only for when you're closing the transaction. There's no to close when you're opening a trade. So that's why. You only close when you're ready to close an existing position. So we're opening a position. That's why there's no to close. How do I, exit. How often do you repair a trade rather than close it out and move on? Chris, if we're referring to repair an options trade, sometimes. If we're talking about a stock trade, almost never. Ben is saying, where can I find the latest webinar recordings? You can find it on YouTube. All of our webinar recordings are on YouTube. So the thing about YouTube is that there's also a notification bell that you can subscribe to. As you can see here, when you click on, you can't do it on my channel, but when you go to a channel, you can subscribe and there's a notification bell right next to it. Make sure you select that notification bell because that means that once we upload a webinar, you can get an email from YouTube that lets you know that we've just uploaded a new webinar. So make sure that not only do you click subscribe, you also click on the notification bell. Is selling a naked out of the money put in this market a good idea on Zoom? So, I wouldn't sell a naked one. I would sell a credit spread so that I reduce my risk so that if Zoom does crash, that you are protected to the downside. I don't like selling naked puts unless it's the stock that I want to purchase and I would sell it at a strike price that I want, that would be comfortable owning the stock at. Zoom, even at 350, I don't feel comfortable owning the stock at that because as you can see, it's trading at 500 times earnings, not the type of valuations I would want to buy a stock at. If you want to see the rest of the name, you can always just mouse over and you can see the full name here on the screen. Can you go over the trade ideas in the portfolio tabs? Where are your daily picks? Our daily picks are always so the daily picks are always emailed to you at 6 a.m. every single day. The trade ideas tab is simply just technical analysis scans. So we have bullish and bearish ideas that are scanned for you every single day. The portfolio tab consists of all the positions that are currently in our daily play portfolio. And we email you new positions or when we close out a position to your inbox every day at 6 a.m. Are the opportunity spreadsheets attached to this app? I'm not sure what you mean by attached to this app. All the opportunity spreadsheets are accessible through the app and they're only accessible through the app. Any foreseeable dates? So we've already talked about that. I'm anticipating launching the debit spreads next week. Where are the webinars? They're all on our YouTube channel, which I just posted a link into the OptionsPlay tool. How much does OptionsPlay cost? OptionsPlay is $75 a month or $500 a year. Raheem, you're very welcome. David is saying, on the options play graph, I added the Bollinger Bands like you did earlier, so I wanted to follow along. Now I want to remove them. Oh, you just right click. So for example, if you added the Bollinger Bands and you want to remove them, just you see how when you move over it, they get highlighted? If you just right click, they go away. Sharon, we are working on the debit spreads, but the only thing about the debit spreads is that it doesn't work the same way as credit spreads. Credit spreads, we're finding opportunities based on risk to reward. You don't find debit spreads in the same manner. It's just a different strategy, and that's why we've kind of held off on the debit spreads. Even if you find really cheap debit spreads, no matter how cheap a debit spread is, it's not a good reason to buy them. You have to have a strong directional view. And that's why we've largely held off on the debit spreads. You really have to have a strong directional view. We're just not sure that it's going to generate enough trades for the debit spread file. And that's why we've been working on it. And that's why we haven't published it. Versus credit spreads, you don't have to have a directional view to sell a credit spread, or you can have a very loose directional view and sell a credit spread. That's why the credit spread opportunity reports exist, but the debit spreads, it just doesn't work that same way. Are the bullish put credit spread opportunities highlighted in the spreadsheet filtered only on the stocks which are oversold? It is, yes. There are technical indicators that are built into the directional view of that underlying stock or ETF. Is the Tuesday session online? I would like to watch a replay. So this Tuesday, so unfortunately, all the recordings from this Tuesday, we unfortunately lost the Tuesday morning session and the Tom Sosnoff session. Again, I really apologize for that. I was pretty upset when I found out that we lost both recordings. But at the end of the day, there's not much I can do about it. But that's why we have Tom coming back here in January. If the delta on a weekly call is 70 delta and the stock jumps $10, should the option jump by $7 at the same time? Yes, it would actually move more than that because you also have to factor into gamma. Delta is not a static number. Is it possible to get a recording replay link to the latest webinar you had with Tom Sosnoff? So unfortunately, I already addressed that. Where is the options course, Talia? You can send me an email. You can send us a message here, and we'll send you the link to the options play course. Send it to us using the questions ask us section. Is the IV from the current chain, or do you put in that manually? So the IV here, the implied volatility, is from the chain. Sanjay, I have seen the options play icon besides some of the stocks. I think I've already addressed that. It's just stocks that trigger multiple buy or sell signals. I took great notes off the Sosnoff webinar. I'm willing to trade them for a great stock tip. Chris, thank you so much. I currently use IB. Is Thinkorswim better for options trading? I will say, in this day and age, most of the brokers are basically the same, but I will say that I can speak to the execution quality at Thinkorswim. I have seen very good execution quality, and from my perspective, that means more to me than anything else. Being able to get filled as close to the midpoint as possible is very important to me as a trader. That and you can't assume that you're going to get the same execution at every brokerage firm because different brokerage firms sell their order flow differently. So for example, if you trade at Robinhood, we know for a fact that Robinhood maximizes payment for order flow, and that means you're going to get a worse execution on your trades. So I prioritize execution over everything else, and I can speak to the execution quality at Thinkorswim. I can't really speak to it at Interactive Brokers. I can't speak it to a lot of firms, but I know for the fact that when you go to the super discount brokerage firms like Robinhood, we tend to find that execution quality there is significantly poorer. And if you're, for example, if you get 2 cents worse on an execution quality on 10 lots, that's $20 that's out of your pocket. For me, that means a whole lot to me. That ease of use of platform or things like that. I'd rather get my $20 on my trade than whether you think a platform is good or not per se. And I've been using Thinkorswim for about almost 15 years now, and I just like the platform. Hi, Tony. You don't mention candlesticks, even though your charts use them. How much do you rely on them? The candlesticks themselves, I don't think I've ever really utilized them because candlesticks may be useful for a day or two, but they're really largely, if you're using them for timing, great, but they're not great for identifying trends. They're not great for identifying whether a stock is, outperforming, underperforming the market. You might use them for a timing perspective. So they're kind of the last piece, if you will, right? Meaning you've identified a strong stock, you've identified a stock that's trending higher. Maybe you're using candlesticks to identify a specific time to get in, but that's kind of the last step. I do not see your YouTube link in the chat window here. Oh, whoops. I think that maybe only went to panelists. I apologize. Okay, I just sent the link into the chat window again for the YouTube channel. Having a profit target price for options is always an art. I thought Tom Sosnoff's comment on going one strike down was an interesting idea. It is an interesting idea, but that's also the same concept that's the same concept as our trading range simulator. Our trading range simulator is trying to simulate a specific trading range and what is a reasonable target price. So it's based on the same concept here. Are you linked to any brokers? No, we're not linked to any brokers. We're really broker agnostic. We believe that we will educate and help you learn how to trade options regardless of who you trade with. We support all brokers. We really encourage anyone to trade at all brokers. Whichever broker you are most comfortable with, we want to make sure that you're able to trade with them. How do you correlate and interpret daily and weekly moving averages or RSI, especially if they don't follow the same pattern? So Barry, we really try to find ones that line up. You're right, they don't always line up, but we try to find ones that do. And when we find ones that do, those are the ones that we tend to take, because when things line up, that's when you have a higher probability. At the beginning of this webinar, you were speaking about low scoring equities, which made me question whether these were bounces might be a short squeeze. Do you question whether the bounces in the low rank stock might be a short squeeze? Yeah, so absolutely. So James, this is why I'm not saying that you should just take these and trade them. You should take them as your short list to research further. Any good trader would tell you that if you just relied solely on one thing all the time, you're not going to be as successful of a trader as someone who's a little bit more multidisciplined. Meaning, if you can leverage technical analysis and also put in some technical analysis, some fundamental analysis behind it, even basic revenue analysis. If a stock goes up 100%, has the revenue gone up by 100%? Have earnings gone up by 100%? That's a basic question you should ask yourself, because what you're buying and selling is a company's earnings power. That's what you're buying, right? When you buy a stock, you're buying a piece of the company. A company, the reason that you buy a company is for their earning potential and the profits that they can generate. So it's important that you recognize, whether the stock is in line with what the fundamentals are showing you. You don't have to scour the financial statements or anything like that to just get a basic trend of revenue and earnings. And that's what I'm referring to. Do you think you will ever link to a brokerage firm so that we can put directly trades onto your site? So Carlo, there are plenty of brokerage firms that have OptionsPlay built into the platform. So there are platforms that do allow you to do that. You mentioned about technical analysis session for your members. As a trial member, how can you get the recording? Umesh, if you send us an email or actually contact us directly through this questions ask us button, we'll be able to look into your membership and send you the link for the recording. Is the information on stocks updated real time or daily? It's updated throughout the day. It's intraday, but it is 20-minute delayed. So it's not end of day. It's actually updated throughout the day. Is there a way to find out which sector a stock belongs to? So I'm sure you can. We don't have an easy way to doing it, but you do have a watch list function, so you can drill down into each individual sector, and you can sort by the the company name and see whether a stock is within a sector. But you can also just do a quick Google search. Yahoo Finance will tell you. There's different, most of the other indicators most of the other websites will be able to tell you. So I unfortunately am running out of time here. We've passed an hour and a half here, but I do want to thank everyone for taking the time out here this afternoon. I really hope that you guys find this useful and giving you a sense for, how to utilize technical analysis in your trading, and more importantly, how you can use it in a way that's very quick to identify bullish and bearish opportunities, because I can teach it to you and it's going to take you a lot of time to go through chart by chart by chart, and it takes a lot of time. So we built these tools to help you scan for that immediately, very quickly, before you look at a chart, so that by the time you're looking at a chart, you already know why you're looking at it and what opportunities you're seeking. If you're looking at a chart fresh every single time, you have to then look at what's the relative strength, what's the trend, then identify what the opportunities are. Here with OptionsPlay, you already know what those opportunities are. So by the time you look at that chart, you can just make a quick second decision as to, does this chart line up with what I was looking for? So with that, thank you so much. And I really look forward to having you guys tomorrow morning during our Friday morning Outlook session, and next week during our rapid fire analysis session. I know many of you love those sessions where you can submit a symbol and we'll analyze those symbols together, give you a sense for how I analyze trades, how I analyze symbols, and giving you some insights into how I'm thinking about the ideas that you have. So I really hope that some of you are able to join us here next Friday for that. Thank you so much. Have a great evening, and I'll see you guys tomorrow morning.